Check, check, 1, 2. Oh, Rory, mate, you're too efficient. That's awesome. We'll kick off with 26. Mate, we may as well just kick off right now. We're ready to go. Let's do it. Good morning, everyone. My name's Tim Fairweather. I'll be hosting the seminar. The link says Mr. Tim Stout, but he's having a rest today. We just like to mix it up sometimes, keep it fresh. So I'll be hosting today. Who we got in the Discord? We've got Mr. Sarur. How's it going? We've got Bell, Dee Went. We've got Rory, Arizona Bob, and there's also another one in there. Fantastic. I'll be taking you through a couple of hours of the ES session today. If you've got any questions, please feel free to tag me in the Discord. Still not super sure how to open up the questions in GoToMeeting. There's a lot of buttons here, but I think Discord's pretty efficient. So, here Rose in the back. Yeah, we're just kicking back, we're partying.
Mayday, Mayday. It's very windy here. Mayday.
Hey, Rose. That.
Okay, I'm standby, just letting you know. Okay.
Hey, thanks very much for that.
Sure.
Rose, I asked Rose to help me out.
Be safe.
Hit really hard. Thank you so much. She's hacked the stream. She's supervising. That's awesome. We haven't done a lot of team presenters on the one screen. That'd be pretty funny. Take screen control. Okay, let's kick it off. So, 25th of July, nearing the end of the month. This month, the Bears have tried to do something a little bit different. They've been absolutely bleeding for another 5, 6, 7, 8 months here. So, lots of profits for the Bulls, lots of 2R targets. You know, any of these monthly bull bars, heavy 2R, that was 55. So, lots of swing targets. But there was no real reason for the Bulls to exit. And that's one of the problems in trading. You can spend all the time in the world getting the crystal ball out and predicting when the market's going to stop, and it can just race on through. So that was the 2R target that we were talking about a few weeks ago. We turned down just before a few of them, but then there are a couple to go. So that was the one we hit. And so potentially some bulls on the monthly chart taking profits, but incredibly bullish as well. So we broke out of a trading range here, so spike, pullback, and then the high one buy signal triggers follow through, and then we're just pulling back to that breakout point. These gifts are great, Rose. Yeah, it was. We had a typhoon in Taiwan. It's just kind of passing by. Typhoon's like you call them a hurricane in the northern hemisphere. Same thing. Incredibly fast winds and very strong rain. So, but it did pretty good. Although in my pool this morning was a tree, a chair, and one of those traffic cones. I don't own any of those, so pretty surprised that tree got there. And that's not my chair, so that obviously just dropped into the pool this morning. Fish those out anyway. So weekly chart, I put up a slide. I was just looking at pullbacks on the weekly chart. We had 3 legs up, 1 leg pause, 2 pause, 3, and then a very strong outside down bar. Now, outside down bars can be great signals. Sometimes they can be traps, but basically when they trigger, you've got this situation where you've got a bull breakout above, right? So bulls are buying. Oh, yep. Buying the close, buying above. Not a strong signal. Possible wedge, but hey, it worked all the way through here, and then this bar immediately closes on its low. And you can see what a lot of traders did. They bought the close, they bought below that bar, and then they bought the close of that weekly bar and were able to get out break even. Now, interestingly, the low of that last leg, that's a lot of L's, low of the last leg, was down here. So I thought that if there were some bulls who were scaling in around 5,500, big round number, they're still a little bit underwater on that last position. And I'm wondering if they'll have to end up going a little bit lower. But if you're a bear and you took the wedge short, it's low probability, but you need pretty good risk rewards to make that pay off. to overlap. I'm not sure if they're going to get all the way down there, but I think they're 1-to-1. Was the moving average, which we talked about last week as well. Any pullbacks back to the moving average and back to this breakout point. So that's around 53, 5400. There was also an attempt at a double top, weak low too, but the perma bears, they'll sell anything and they'll just keep scaling in. So I think they'll be happy to get back down there. Could have been a shark in the Port Young, but that was not. But plenty of those back home. Daily chart, bit of a different story. Much easier to see the wedge top, and then we had a second entry short. And sometimes when you get these really strong signals, it's the first one in a bull trend, and you don't want to be the first person to sell. No other bears have made money, but then it works. And usually when that happens, you get a magnet at the low of that bar, everyone trying to take that trade after the fact. Now that it's worked, people want to jump on it. Bears that took it and scalped, or they took it small, want to get a bigger position in, so they're looking to scale back. So somewhere in the sell zone of this bar, somewhere in that breakout point, but didn't pull back. And that was interesting. So you get a bear micro channel, it's counter trend, and then you had a great opportunity to sell here. You've got the tough signal that makes you question whether you want to sell. It's the first test of the moving average, but difficult to buy a high one in this environment. And you've got the breakout point there, 56.33, and this is the sell zone in here. And that was a great sell there. So really strong entry bar on that sell. And if you look at where the risk reward might be, your stop's up there, you take that sell to close, you're about 54. If you sold underneath that bar, you're about at 1-to-1 there. You've got this problem now that you've got this huge bear bar, your stop's far away, so you've got probability, but then you've got a big risk. So traders wondering, what do you do here? Usually when you get a big bear bar on the daily chart on ES, we usually have some overlap before follow through. A lot of the times it will just be sideways. Here surprised everyone and came back. And then this is what the bears would like, immediate follow through sideways and another leg. So this was an important price for bulls. It's a bull spike. I suspect there'll be lots of buyers around here or scaling in. So I think today, 5,500, we kind of raced through it. I think we might go back and visit that. Alternative is that we don't go back and visit that and just plummet down a bit further. That's too far, obviously, for one day. But the measured move of this range, I think we hit. Yeah, so we're at measured move targets, and might be time for a bit of a pullback before maybe one more leg for the bears. We'll see what happens on the daily. So let me just get back to the RTH. So the RTH chart, for those of you, if you're new on the stream, please feel free to send a message, say hi. I'll do my best to cover some of the more fundamental aspects of the course. Otherwise, I'm just going to assume everyone has done most of the videos and has probably taken 50 to 100 trades, and we'll work from there. So it can be a little bit more difficult to see on the RTH chart. That's why it's a bit easier on the ETH. Yesterday, very strong bear bar, a little bit of a tail. So probably going to go below there, 54.62 to see what's there. 60-minute chart. So same again, we had the wedge top. You zoom in, what are you going to find? If you zoom in, you're going to find a channel, and we broke out of that channel here. Very strong breakout, and then we pulled back a couple legs sideways to up. We had a wedge bear flag. And on that day, I was expecting it to turn here. And then when I looked at the chart, I thought, well, it doesn't really have to if that's the breakout point up there. It can, usually kind of hovers a little bit under, if you draw a fib from that, from what looks like a reasonable place to put your stop. Usually as it crosses that top third, it's a good area. It looks strong. The bull's got some follow through. It didn't close above. First sell sideways, and then see you later. So that sets up some other maybe larger measured moves, which would be the size of that range. which is putting it down to 54 area. Yesterday was very strong on the 60-minute chart, and small pullback bear trends was something that really just took a lot of money from me for many, many years. And then slowly you kind of work the skills to enjoy them a little bit more. Basically, you've got to be able to classify, I think, what you're seeing. So in terms of strength, let's give it a blue color so it's not as aggressive. Strength. I think I can do that without the, just click. There we go. You've got the breakout, and then you've got a breakout follow through. You've got a micro channel. And then what do we think comes after this? A breakout follow through. You've got a micro channel. And then what do we think comes after this? Let's see if everyone's been listening to Rose's educational material. I know she's talked about this. All right, some people typing and then stopped. In terms of strength, what are the structures we're looking for? What are the structures we're looking for? Yeah, gaps. Okay, so microchannel's got gaps, breakout follow through, but what do we call these market structures? Okay, once, oh no, we've got some more typing. Because it can be nearly impossible to trade price action well without understanding these. Thank you. Type channels. Wonderful. We'll type channel, and then what comes next? So judging by the answers, I mean, whether you answered or not is not the issue, but these should kind of flow out in your mind really quickly. Otherwise, definitely look to practice a little bit more. It's going to help. We're missing one. We're missing one. It's on the screen. It's taking up most of the screen. Come on, guys. You can do better. Small pullback trend. Nice. Then we've got the channel. Then we've got the broad channel. Then we've got the trading range. Oh, you guys are going to get in trouble from Rose for that one. So this is what different market structures look like. These are the names we're given. And they help us to trade and take positions. Now, someone mentioned gaps. Gaps are very important. Sorry, Rose, I just went straight to the, I thought they had that one. Because what you're looking for here are ways to get in. Now, in a small pullback trend, the best entries, you'll notice, are buying the close of bull bars. See how it was nearly impossible to lose money selling the close of bull bars. So when you're here and you're saying, oh no, it's 30 points risk. Yeah, it is 30 points risk. The bulls have got nothing. They've got no bar. And so this is more likely to follow this pattern. All right. We think if we, as soon as we press the button, that the institutions are going to right away reverse it. But everyone's short here and everyone's selling and scaling in. A lot of people who are selling here, if you sold up here, you're taking profits, but you're looking to get back in. Right. The only reason you're taking profits is because you're at max risk. Right. So you get bull bars, and rather than closing your position and going, oh no, it's turning around, you're waiting for this pullback to fail so you can get short again. And now you've got another sell signal. And if we go below it, and if we go below that bar, we're still short again. Anyone that bought is losing money. Okay, now they're in trouble. What are those bulls going to do? Are they going to double and triple their position? No, they're going to try and get out of that trade. And so this is one of those days where you've got to have, I think, a really good understanding of how to decide what structure it is. in a small pullback trend, gaps don't close. All right, if you draw lines under these breakout points, they only start closing when we form a wedge down here. But up to this point, they were open. So I think that's one to, yeah, there's a slide actually in, let me get that one out. There we go. I actually printed it hard copy. I think I actually showed it on one stream, to be honest. Here we go. That's what we want. This one. That one. This slide. Breakout, micro channel, small pullback, high channel, bear channel, broad trading range. So that's ones you gotta know really well. yeah, we need $1. So what did you do yesterday? Well, it's a gap down, and the gap down is huge. So we know a couple of things. With such a large gap down, it's more likely that we're going to get a trading range, but it doesn't mean 100% likely, because we get consecutive bear bars on the open, and then we get an almost inside bar and then a sell signal. So it's a sell below. And if you're not sure what to do, if you're uncomfortable, go to micros, hit 1 micro and sell. And if that's too big on the account, go to SPY, or if you're trading CFDs, $1 a point, that's your signal to sell. And right away it works. And there was no reason to exit that trade for the next half an hour. Any of these later sells work, but that's the first one. Then we had a pullback and a sell signal. That's one. Then we had a second pullback and a second sell signal. The question will be, where do you put your stop? Some traders might put it up here where the bars start overlapping. I think that's okay. Because if that's a spike, as soon as there's overlapping, that's the start of a channel somewhere up there. Other traders will use the breakout bar here. But because it's so close to the signal bar, I'd usually put it a little bit higher to give it a bit of room. Now you've got a new low. So you've got a space to go. And the thing is that they would just keep working until the bulls get something. Bulls triggered once. Sorry. 1 bull bar triggered. 2, 3, 4, 5, 6. So if you're worried about the first bull bar, then usually you need a couple more to turn something around. So, but also tricky. Also, if it's confusing on the 5-minute, switch up the time frame to the 15-minute chart. Now you've got consecutive bear bars closing near their lows on the 15-minute chart, and you've got a breakout below. So there's a chance you sell here. You have your stop up there. You have a chance you can sell more up here, knowing that you're selling at that breakout point. All right, see how that lines up really nicely. And then now you can trade it on the 15-minute chart. So if you see pullbacks on the 5-minute, but the 15-minute is still in a micro channel, okay, we went a little bit above there. That's 1. We went a little bit above it there, 2. And then the third time we went above a bar on the 15-minute chart, that's actually where the 5-minute went sideways. So. And if you've got more time to trade, you can use the 60-minute chart. This is where a lot of the Walmart trades come from, in my opinion. Really good hourly setups. Strong bear bar, closing on its low, right away go below it, and now we've got a gap. So if you're trading and you're able to be at the computer or join later and you've got this gap in the middle there, it's going to be really difficult for the back half of the session to undo that. It's more likely, and if you go and look at the first couple of 60-minute bars of a session, it usually at best does that sideways and then see you later. So it's not the way to look at it. G'day, Tom. Left a runner for the measured move of the 15 minutes spike. Yeah, nice. Good idea. If you can use multiple time frames, use it. If you get confused, that happens as well. But, Al says in the course, find a time frame where the moves are 3 or 4 bars long. Just find something that you can read. And I took that literally to mean when I'm confused, I just find a time frame that makes sense to me. and then I just trade that. What helped you be successful at small pullback trends? Yeah, Paul, it's a good question. I think firstly, losing an absolute ton of cash, I think that was the foundational element. That gets the curiosity to actually get good at it. But secondly, trying to understand what I was explaining on the last couple of sessions, and that is that this market's fractal. And so if I zoom in and zoom out, what I'm doing is I'm seeing a breakout. So you understand how to trade a breakout. As you zoom in, then you're still seeing that breakout. And so it doesn't make any sense to, look at, so I'll just put the bar numbers on. You get to bar 7, that doji, right? And you're like, oh no, I can't sell here. Like, I'm at the low of the day. It's going to reverse. The stop's 30 points away. Swings at 20 points. Here are like all the reasons why it's going to reverse. But the most important thing on this chart is that there are no bull bars. Like no one else is buying. And so I guess through practice, you realize even if I take a small sell there, like, literally force your mouse over to hit 1 micro, have a stop up there, and then you'd be surprised at how few times that stop gets hit. And on a day where that stop gets hit, this usually turns into a measured move up. So you take the loss, you're able to reverse, and you make it to the upside. And I guess you just got to practice that a couple of times. A lot of market replay, that helps. But the market very rarely has one bar that totally shifts the whole session. There are days that do that. But everyone for the past few hours has been selling above, selling higher, and scaling in and making money. So the first time they see this bar, they're not shifting their opinion of this entire day yet. All right, we're in a wedge. Sure, we're expecting 10 bars sideways to up. At best, the bulls are looking to get somewhere up here, which on the 60-minute chart is right where we pointed out, around about half of that bar, or at best in the top third, which means the best they're going to get is a trading range. So you see how they kind of fold together? And if you're quick to get out when you're disappointed, but you're also able to stay in when your bar doesn't get challenged. Here's another way is look at the bar that you sell and draw a box around it, right? So I've sold that bar. Now, as long as bulls can't shake me out of that particular bar, then anything underneath, I'm swing trading. Right? So this is a swinging environment. This is not a quick scalp for 5 points, happy days. This is a hold and sideways kind of environment. And once you see a couple of reversals, okay to get out and look for a second signal. And that was a little bit after I went to bed, unfortunately, but great signal, great follow through, just super clean. So look at the bar you're in and then make a decision on your trade based on that bar. So if bulls are able to get up here and close here, okay, well then the premise for the trade here might be over, but that doesn't mean that this isn't in play. That makes sense. So you never know, we might get another one today. So let's get rid of those. So we had a breakout point there, we don't need that. We had a breakout point there, we don't need that. Possible measured move there. On the ETH, I think we were already at it, yep. So we can get rid of that. So we've got the wedge bottom that broke out before, so that's the bottom of the bull spike. So that's a target. I also think usually the last area we broke out of, come on, fib tool. Oh no, doesn't like it. Let's try it again. We'll go up. So 5512, 5500, I think these are targets for the bulls, and there's probably going to be some sellers up there. You can see here we've had really strong spike and then channel, and then at least on the ETH, where do we get a new low? We got a new low here, then we went above. So I'll be watching on the ETH what happens around here. Haven't touched the moving average in quite a while, so probably still sellers. Let's get some IHLC. What broker? You just need NinjaTrader, and then it's free. Let's get rid of all that. Let's get rid of all that. Let's get high, low. What bars did people trade yesterday? Where'd you get in? Where'd you get out? It's very useful to talk about trade management, I think. Okay, so we've got the Globex high and low, only 40 points. So small range, we might actually break out of both. Is there a video that breaks down the best indicators for our setups? There's a whole course on it. There is a whole course on it. It's trading course. So yesterday's the range prior was that one. Okay. I'll just keep that on there. And then that whole range, in case we keep chugging down, is there. Okay. It's nice. Okay, Tom, sold below 3 to 15-minute bar. Excellent. 10 points, that's a runner. Yeah, that's great. Easy done. Yeah, and if you've already taken a good trade, I've been trading DAX pretty well the last week or so, and I haven't traded the whole session. I've just had a couple of good shots, and then rather than push it, I thought, you know what, I'll just take a bit of a rest, come back for ES later. You know, there's nothing that says you have to keep trading all day. You just trade when you feel good and you're in the zone, and I'd say keep your edge. I'm just guessing that people are not sharing their entries for yesterday. It's fine. I've had days where I've been buying, just buying a small pullback bear trend all the way, and you just wake up the next day and you're like, why did I do that? So TradingView does not have market replay, but it is really good, I think, for bar by bar trading. So you have to buy or sell on the close, right? So that's the only way you can execute it. So you can't do limit orders or anything like that. So I think it's actually really good practice. Anyway, I think it keeps you locked in. Yeah, Quan Chi, no worries. That's why that's why I was sharing my own embarrassments on it. It's just it's tough to trade. It always looks like it's reversing, and then it's part of that skill of being able to sit in uncertainty, but also have probabilities, risk reward, higher time frame, other things on your side. Okay, great. We're off and racing. So yesterday, strong bear channel, and we can draw the trend line a few different ways, but we're channeling down and we're coming up to the top of that channel. And usually to leave a channel, the market has to do something climactic at the edges. It can drop through and reverse, it can drop through and create another channel, or we have to break up and go sideways. The bulls here want to break above yesterday's 77 and 75 and set a measured move up. But these channels can go on much longer than you feel like they can. So it looks like on yesterday's chart, if we look at the low, the high there is 83.25, 83. So we actually broke 77 by one tick. So technically that puts this more into a trading range, and we're going to see if there are buyers down here. If you use that embarrassment and go, okay, I'm going to go and find 20 or 30 small pullback bear trends, and I'm going to print them out, and I'm going to try and like work out how I can trade them, right? People saying expect a pullback anytime. But you were long, yeah? Yeah, it's you know, it takes a few bruises, takes losing some cash, but also, yeah, use that motivation. You know, some people turn around and just blame, you know, the market or other people and go, okay, what are the ways I can trade it? And that's what Al's doing on his charts every day. Mark up all the trades I can see. How could I have gotten in? How could I have added on? How could I have scaled in? If this reversed, what would I would have done? And then it kind of just builds this muscle memory. So you stop doing those kind of things. I pulled up a chart the other day of my yo-yo P&L from ages ago. Oh, I wish I still had that screenshot. It's probably in the chat. It's like many winners, winning days, but then huge red days. Huge red day, huge red day, huge red day. They were all bear channels. Really need to find that. So we had a very strong spike on the 60-minute ETH, and spike, next comes a, hopefully in your mind you said channel. So we're in the channel phase. Instead of it being so steep on the way down, we're now a bit more of a gentle angle, looking at the slope of the moving average. Aren't they the least traded? Well, they're the least common in ES because ES is a basket of the top performing stocks. So if you're not performing, you get chucked out of it. So it makes sense that that's the least common type of pattern. But on the other hand, it's the one that everyone loses all their money on, so it should be the best. You know what I mean? It should be the one that everyone's super on the risk for. So, is there anything to do here on bar one? Well, we went one tick above 77, and we just touched the moving average. So I think better to see if we're going to break below this bull spike and set up a measured move down. So it didn't look like we went, did we go above? No, so we didn't go above that bull bar. So we didn't trigger it. We triggered this one. When I say trigger, I mean that rather than traders just being able to buy the close, they were able to buy on a stop one tick above that bar and get filled. And a lot of Al's course talks about that style of entry because what it does is it gives you a little bit more probability. So you might miss out on a few of the 2-to-1s, won't quite go all the way there, but it triggers a lot for your 1-to-1s. So first bar of the day, bear bar, and we're in the middle of this bull spike. Usually our weights, 3, 4, 5, 6 bars to see what sets up. Even if you did nothing here, when you see a bull doji is the only kind of bull bar here, you know it's setting up, breakout, pullback, and then another sell signal. So we're waiting for the same here, breakout, pullback, and then a sell. G'day, Ray. Yeah, there's a couple of different ways. I know you like trading with limit orders, as I do as well. So if you want to trade limit orders in this, then you need to look for breakout points on a lower time frame. So if you, sorry, they've made this really annoying feature where they think you want to draw on the line all the time. Now if I zoom in, oh, hang on first. If I zoom in on a small pullback bear channel, what am I going to find? What market structure? Helps if you understand this bit first. What am I going to find if I zoom into a micro channel or a small pullback bear trend? No, not a broad bear channel necessarily. No. Really, guys? Come on. A channel. So here, channel, right? Channel, we barely touch the moving average. All we do and we create sell signals. Nice. Non-broad. Yeah, tight. So, and how do you trade a channel? Well, channels have spikes, have 2 or 3-legged pullbacks. Here, 1, 2, 3. 1, 2, and there's the sell signal. So it creates these little flags, right? So if you see the spike, and instead of just hitting a sell below, you wait for the pullback to fail, and then you get a sell signal. Wait for the pullback to fail, sell signal. So that would be my recommendation. See how we just come and just don't quite close these breakout points? Here we closed it, but so we didn't close it. We went through it, but never closed it. So that's another way to do it. If you're good at trading a channel, then just zoom in, but manage it on the 5-minute chart, if that makes sense. So you can finesse the entry on the 2-minute, but you really want to manage it on this chart, I think is, otherwise the profits will be too small on the 2-minute chart. As Al says, you'll be underpaid. So went below 1 and found buyers. That makes sense. We went above 77. There's 4 bull bars. There's traders here trying to take a shot at this reversing. But we know this is more likely to turn into a trading range before it reverses. If we go up a time frame from that bear channel, on the ETH chart, you see very sideways. We tried to break out, sold. So if this is going to be a trading range, then we're more likely to run skunk stops down here and reverse, which is down the Globex low. In a trading range, basically wherever you think your stop should be, it should probably be a swing point back. Why more likely a trading range? No, it's before it reverses, it has to turn into a trading range, more likely. At the moment, we're still in a bear channel. Here was a lower high, we went above it. So we're breaking double tops and reversing. So we want to see if we're going to break a double bottom and reverse, or we're going to continue, leave a gap. If you're selling on the ETH chart, where's your stop? Probably up there somewhere. So consecutive bear bars again, but a little bit different to yesterday. Not able to close below yesterday's lows, so bears are going to try again. Yes, you got 2 legs down, 1, pull back, 2. So basically, they went a tick above there, but that's the strongest swing point. And if you're not sure, look at what came out of it. So 3 bars. So it's good that that's broken for the bulls, but like you said, we need to start taking out more swing points to turn it into trading range, to get the pullback into the deep zone, to get us wing out of there. What other ideas can you tell of this small pullback trend? So initially you use like what you've learned in the course to try and identify it. And then I think the real key is that, for me, that feeling like it's always going to reverse, it's like you become sensitive to that feeling. So when I have that feeling like, oh, I'm not sure, oh, I'm not sure, I'm not sure, but it's 5 bear bars in a row, I'm like, oh, I am sure. We're in one of those. Because every time these bars broke out, it went back. Broke out, went back. And then right at the end of the bar, dropped. And so you get used to seeing that behavior and you turn that emotion into action. Whereas if it stays in like, am I in a small pullback bear trend yet? Well, it's hard to tell here. The moment we're in a breakout, we've had a couple of legs, we've got a gap down. But at some point, you get that feeling. So then you trade small, and then you just see how that contract goes. If that contract's still live, and you get another sell signal, then you can just keep adding. And if one of your soldiers gets terminated, then you can reassess, You're shelling in here and he gets killed, then you can wait. So starting to behave more like a trading range right now. 2, unable to break below 78. Sorry, unable to close below 78. Now we're back at the open. Yes, Al says you feel like you're missing it. Yeah, so if you feel like, oh, it's definitely going down, rather than default to hit a button, you go, okay, I'm in a breakout. How do I trade a breakout? If you're waiting for information, then you're probably in a trading range. So you trade like a trading range. Wait for it to get to the extremes. Look for a 2 to 1. You probably take 1 to 1. Look for where you should put your stop and probably put it a stop back. So we're about to have our first bar on the 15-minute chart. At the moment, it's a bear doji, but we've got a new low. So we're still doing bearish stuff. 60-minute RTH chart, not looking good for the bulls. And we're happy about this doji. They were able to get a close above, but no follow through. Do you think going long? Well, at the moment you've got 2 mostly overlapping 1. You've got 3 overlapping 1 and 2. So it's probably a triangle of some kind on a lower time frame. So I think you need to, I prefer to sell the bear breakout here once there's a breakout, or get the bear stuck. And you see the bears didn't get stuck here. If you sold under 1, you had a chance to get out on 3. If 3 went below 2, I'd be more interested in reversal. It's kind of all low probability scalping in here. And you might think, hang on, isn't scalping high probability? No, it should be high probability if you wait for momentum, something clear, multiple reasons. But it's kind of flip a coin stuff in a small range. And on days where you go, oh yeah, but you could just buy under 3 because it's a trading range, I can also show you many days where that just plummets 15 points. And now how do you manage it? So if we ignore these bar numbers here because it's too late in the day to do much, to manage the trade correctly, your consecutive bull bars, you look to buy, you buy below, you can get out of break even. You couldn't quite get back at your original entry. If a bull bought above 80, what happened to those traders? Okay, so they got out break even. So bulls are okay. Bears trying to set up a low 1 sell. So they're seeing this as breakout, pullback, and then a sell. But to me, this is a bit of a problem here. I want to see a decent close. Yeah, Ray, it's a good question. I think, just thinking about your question again, if you're able to use a different time frame to get a bit of perspective and just find a time frame that makes sense. So, you know, here on the 60-minute chart, we're in a breakout. Okay, maybe that doesn't help if it's early in the day. But when you see this on the 15-minute chart, you're not expecting the next 3 bars to be bull bars, right? So how can I trade this at a size which allows me to scale in a little bit higher to get out break even, worst case, or stay in and add on because I'm only at a small size and I want to get up to my full size. If you use any of those trading softwares, journaling softwares, and you can basically export your trades from, you know, Ninja or TradeStation or MetaTrader, drop them in and they'll tell you stuff like, hey, you lose a lot of money in the first few bars, or hey, you're really good at the end of the first hour. Because you might find that the difference between being really profitable and your current position, or being really profitable instead of just regularly profitable, is a particular time of day. Bing, do you ever enter a trade full position? Yeah. Sometimes. It's my way to get in or manage it when it's unclear. But when something's pretty clear, like if I'm using limit orders in a breakout pullback, then usually I'll just take a full position size. Just depends on the situation. But you know, it's easier to default to 2 sizes, you know, half and then half. But you've got to be able to get that second half in, otherwise you're going to take, you know, you're just swinging a small size, and then you're kind of not trading the right size for the account, I think. So inside bar, oh, we were right, it was a triangle. So it's breakout mode. Bulls want to buy above. They went above 77 once. They want to go back above there, break out of that range and go up. And we'll keep it fair. We'll put that on the chart. Yeah, Ray, that's important. And I think, you know, you said, you know, train well by BPA not to look for reversal, but also, you know, what do reversals look like? And so if you do a bit of homework on how does a reversal work? Well, you have to break a trend line. Yep. And then maybe we've got a lower low to set up another buy signal. But at this point here and this point here, the major trend reversal has for sure failed. There's too many bear bars. Too many bear bars. So you've got to be able to go, I'm open to the reversal, and then if they don't get that bar they need, like if they don't get another one of these here and then follow through, then we're going down for a measured move. So you're equally able to position yourself that way. So here, strong break, but then we came all the way back to test that line and then set up a buy signal. We came all the way back to test that line and then set up a buy signal. But if you were looking for it all day, you would have got cooked multiple times. You know, you're looking for that reversal, you buy too high, oops, take a loss, miss the move down, try and buy, oops, take a loss. And that's how bear channels just punish newer traders. I think most bulls that bought here needed a better bull bar and to go above it. But at the moment, we've gone below bear bars. We haven't gone above a bull bar. So that doesn't mean we can't do 40 points up there, but I wouldn't be holding long if I'm getting bear breakouts. You buy 49, you're happy with a follow through. You get a bear breakout, you get another bear breakout. How many bear breakouts are you going to see before you decide, hey, I might actually be doing the wrong thing? This is not reversing. And the good news is, if you get out of that position and reverse, a lot of the times the market will pay you back. We know traders should practice. There's a couple of things I like to practice. One is called best trade of the day. Oh, that's not going to work. Let's copy that. Going to work. Let's copy that. Copy image. We'll just wait and see how this bar flows. We need another inside bar. Oh, we might. Okay, so another inside bar, breakout mode. We've got news coming up in 5. So we've got the pirate pattern, we've got IIs. Probably just best to wait. So yeah, have a list of things to practice. So this is called, you know, best trades of the day. Pretty obvious. You put arrows where you think the best trades were that never came back. All right, so you know what that day looks like and where the best trades are. But the other one I play for fun is called the unluckiest trader in the world. And if we get that, if you imagine you do the exact opposite and take the worst trades, what happens? Okay, you buy there, you get stopped out, you reverse, you make it back. You buy there, you get stopped out, you reverse, you make it back. So now you know in a small pullback bear trend, if you are doing the dumb things and reverse, you should actually get your money back. So I invite you to play that game on different days. Here's another day, a bear channel from it was last week. You buy 5. Hey, it's a gap down. You've got a strong bull bar. You're thinking we're getting out to the moving average. You see 6. By the time you see 7, you think, you know what, I don't want to be long anymore. So, you know, maybe your stock was down here. You just need to get out of that position and you hit sell. Or you wait for a couple of bars to recover. You draw a line and you sell at that area. You made it back. You took any of these reversals. Now you've got second entry shorts and follow through. You sell, you can make it back. What if you sell 45, the lowest bear bar of the day? Well, you actually had a chance to get out break even. You could have waited and got out break even. You could have sold at the high, got out break even. So in a bear channel, now you know, even if you do the wrong thing, you can at least make some of that loss back. So there's not that many kinds of days. So after a while, you get kind of used to what you think's forming. So bear's getting the breakout below 2. We're below 3. We've got some measured move targets down here. The bulls would like us to stop going down there, obviously. So breakouts of a triangle often come back and test that apex. So just put a little line there. So I'm not in a super rush to sell, 15 points below that triangle. I prefer to wait to either miss it or wait for the pullback. So big bear bar on the daily chart. The bears would really like another one of these. We know probability-wise, probably not going to get a bar like that. The risk is enormous. We broke out of a range, didn't come back. We also had a really big bull spike around 5,500. So I think we were going down. We're not going to go down all day. So you've got a bull doji, so not a great sell signal there, but also, how many bull bars? Not many. Okay, Andrew, I made some mistakes yesterday. I bought mid 52, B52s. You bought mid 52. Okay, yep, trading at the moving average. Okay. Because I was expecting a third leg up. Yeah, so you're trying to buy the pullback to get that leg up. Gotcha. Yeah, it happens. And to be fair, you're thinking spike and wedge channel, 3 pushes down, and you're thinking, okay, I think the bulls are going to take over, turn this into a trading range, maybe get a measured move up somewhere to the middle of the day. So I think the question is, what do you need to confirm it, and what says it's going to fail? So here, you've got first touch of the moving average bad, so you're looking for that deep pullback, which they got, but you had to be super quick, and then that was it. That pullback was finished, and then you need a new high to get that pullback. So, but where did you get out? So, but where did you get out? That's the real question. It's a good bear bar 6. Bear's getting the follow through down to the Globex low. So back to always in short. Yeah, it happens. Yeah, it happens, and it usually spirals. There's actually a really good book I read. It's by a fighter pilot, and he was saying the same thing. He was saying when he was coaching, some of the best kind of Top Gun pilots, they'd be just like flawless marks, and then maybe towards the end of a mission, he'd just like make a comment or say how, hey, you didn't, you got a light flash, you need to fix it, and they would go from one mistake to a second mistake to heart rate rises to forget the flaps, forget to use the radio. And he's like, it's crazy how one mistake turns into many until they basically panic and they kind of forget how to fly the plane. So they have to train that, to train them to stop, refresh, and not turn this mistake into several more. I thought it was really interesting for traders. So bears got 1-to-1 on 6. And we're probably at the measured move roughly. I think the stop was above 75 because 81 was a bull bar and went above 77. So we're about at that 1-to-1. So blue X low and get rid of. So 7 becoming very large as we go down to that measured move target. Oh, I thought you were a pilot, hi Joe, I'm Dad, by the picture. Yep. That'd be interesting if you could share more about that, how they break that cycle. I thought that was fascinating that he said, you know, the mission's finished and then a couple of comments and then it's almost like they're panicked. They can't fly the plane anymore. They break that rhythm. And then a couple of comments and then it's almost like they're panicked. They can't fly the plane anymore. They break that rhythm. He said particularly the better you are at a pilot, he said the less use you are to making mistakes, so the less practice you have at resetting. That was funny. Whereas the guys that are pretty bad are kind of used to stuffing up. So 7 becoming very large, and we're getting down to those measured move targets. Repetition review, good instructor. Yeah, nice. So we broke out of that small range. We broke out of that larger range. So not much going on for bulls here. And big bar for the bears. So big bar, big risk. We had a couple of profit targets for the bears. I missed the sell on 6 because I was too busy on the chart somewhere, but I just scalped. Not 100% sure why it works, but for some reason when you take a breakout and split it into thirds, you often get a nice sell around the top third of that. I think it's because it's likely to turn into trading range, but it's a very high hit rate. So you can see this kind of steady, gentle slope, and now we're starting to have very strong spikes away from the moving average. So it's becoming more climactic. Now the bears would like this to be a bigger measured move after a big daily bar, but these small overlapping bars go much further than these strong spikes, usually. We're still in a micro channel on the 60-minute chart. We've had a couple of 15-minute bars. We've got a measured move of that trading range. We're at that measured move on a 60-minute chart. So what are the things you're looking to see when you're holding? Well, one thing is that are we going below a bear bar's low? So when we stop going below bear bars here, you You can see a lot of these reversals happen because we don't trigger the sell on the stop one tick below that bar. But as long as we're setting new lows, then it's difficult to get long. Nice, mate. Well done. So 20 points from 6, not from the 6 low, really. So you're glad you didn't buy below 3, right? Hey, nice. Well done on the 20-pointer. Well done. 20-pointer. Well done. Sorry, mate. The points are good. We don't need the dollar stuff. There's there's no need. If you focus on the points and you focus on the risk management and getting your reward right, then the money will make sense. Yeah, no worries. Let's get rid of that. So on the daily chart, we broke out of this or this. Which is down here, but that's not necessarily something we're going to reach on 60-minute chart. We switch that to ETH, make it a little bit more sense. So for the overnight traders, those bulls need to scale in around 29. Definitely not recommending that strategy for everyone else. It's clearly always in short. Someone was asking about full and half position size. So on that scalp, I take that on a full size and then just take half off, and I'm looking to add another half on because I'm known to jump around the charts on these sessions, and then it's a bit easier to manage that one. So another good 15-minute bar for the bears. We had a couple of tails. See kind of a double bottom or some kind of wedge, but we broke through it, which sets up that measured move. And I think if you take the highest point, we did the lowest point measured move. The highest point's about there. So you've essentially still got bears stuck down here. And that's fine. If you have entered a trade, that's totally fine. Don't feel like you have to do anything. The best feeling is to feel at ease, I think. Markets moved very far, very fast, and so it usually pays to wait. So I won't usually enter a pullback within that first 30%. I usually wait for the other side to have 2 shots at it. We're at a measured move target, and bears were able to get 20 points. So bulls want to break out of this, maybe pull back and then get back to the apex of that triangle, which is where we said we might get back to. But the swing buy is lower, really. Like, I don't really want to buy above 10. So you've got bears who are short on 8, selling more above 8, trying to get back to the midpoint of their trade. Bear micro channel, small gap. Oh, Tom, you beat me to it. So it'll be interesting to see what the limit order traders get here. Usually sits right in the middle of that gap. okay, which is 52. Okay, so we've got their 5 points. The bears that sold 8 and sold higher needed to get back to that midpoint. Otherwise, they're going to have to abandon that short or scale in higher. So above 7 at the low, but we're far away from the moving average. So those bears selling, they're trying to get back to the 8 close, which is also the close on the 15-minute chart. See again, same 2/3. It's crazy. Yeah, good question, Paul. It depends on the market structure. Depends on the market structure. It depends on the leg count, really, I think. For example, if you're in leg 3, then the break even is a little bit more difficult. Can you give me a bar? It's too general, the question. That's a good one. So bull's getting a strong close here, closing above 8, looking to get that measured move up to break the 6 high back to that triangle. You've got bears who sold and sold more higher, trying to get back to this break even, and that break even happens to be the 2-to-1 swing back up there for the bulls. So 9-10 strong enough to get one more bull bar, I think. And if they go above 7, then they're putting a lot of pressure on these bears here. So, you know, if you sold 8 and you've got to close above your bar, you've got to do something about that. If you sold 7, you've got to close in your bar. So if we go down to that area, you know, what are you going to do? Then you might decide to exit and sell later and then look for another sell signal. So the bulls are trying to force these bears up, but there's also an open breakout gap. So there are some bears who flat, saying, hey, we're back up into this 2/3, 50% area where they're happy to sell there and higher. So I've marked this low 1, essentially, basically anyone that could sell below a bear bar. We're always in short, bears have got the market. So I want to see what happens to these traders here. I know if you sold the close of 8, you were not able to get out break it. So those scalpers who sold in that micro gap, it actually went down to get their 5 points and then came back up. So it looks like we're going to go above 7. So even if you don't trade limit order scalping, it's good to understand what traders are doing so you can see kind of appetite at those levels. So like here, we didn't even get to above that bar for those limit order traders to sell, so I have to chase it down. Paul, I didn't get a response, that's all right. So in terms of managing break even, I think the easiest is just to wait for second entries, then enter, and then don't worry about the break even trades. Just put your stop and have your stop where the stop should go. So if you're selling anywhere in here, the stop's at the high here, or if it's close to the high of the day on other days, just put it 1 tick above the high of the day. So if you sold down here, you've got a size that can handle 38, 29 points, and 29 points of whatever size is only half the size because you're probably going to sell a little bit higher. Try and get 1-to-1 or 2-to-1 on that scaling. Get back to break even. Yeah, it's like a game of psychology. I'm trying to look at, like, if I'm in a trade, I'm in a trade, but if I'm not, what happened to these traders that sold here, sold here, sold here? These 15-minute traders here, if they sold, they're going to sell more above the high of that bar, and they've got a wide stop. So you might have 5-minute bears stressing, but the 15-minute bears are comfortable. On the 60-minute chart, anyone that sold that bar, it looks like those 60-minute bears took 1-for-1. So that's interesting. And that makes sense when you look at this bear micro channel, because you can't have a stop all the way up here and then hold for swing targets. You have too much risk. So now going above 10, so bull's trying to get back up to the 6 high and then break out to go above the Globex high. And that's what we said earlier, because it's a small Globex range, you might do the low and the high. But if you're buying here, you need to stop at the high of the day and you're looking, a stop at the low of the day and you're looking for a high of the day. So now 3 consecutive bull bars. So a lot of bears won't continue to scale in when they see such a strong breakout. Right, at some point, you're asking about break even. You've got an opposite breakout that's just as strong as the one that you were trading. So that's just as strong as the one that you were trading. So bull's able to get back to the breakout point. Okay, so Globex high is about 1-to-1 from the low. On the daily chart, this was a strong bear bar. And we wanted to see what's below it. And we broke out, and now we're testing back to the underside of that bear bar. The side of that bear bar. So you've got a bear microchannel here, and now you've got a bull microchannel. That's another one to practice, Ray, is you're trading limit orders. What's the exact opposite of what you're looking for? So we sell 1 tick under there, under there. So if the 8 bears are still in, they sell more at the high. That's their break even. They haven't had to scale in another time. So going above the 15-minute bear bar here, 60-minute bull doji, weak sell signal, we went nearly 30 points below it, and now we're back up underneath it. Getting to the end of the first hour, we're back at the moving average, back at that triangle, and I don't want to leave a body gap here. Strong momentum to the downside, so if the bulls can't get the job done here, then bears can expect a small second leg. Hi Oliver, yesterday on the ETH daily, the open was the exact high and there is a gap. On the daily ETH. So 4 bull bars. So you've got bears giving up. Strong bull bar on the 15-minute chart. So if your 15-minute bear is selling higher, trying to get out break even. You've got bulls buying above 9, got 2-to-1. 10, your 1-to-1's up basically at a new high. Put your stop above 10, your target 67, back up in that apex. We had trading range for the first 5 bars, big down, big up. So strong spike, hard to sell above, and then strong spike, hard to buy below. Bulls would like this to be the V reversal to get a measured move up, but they're not very common. So more likely to get some form of trading range. But now they're about to break this swing high. It's kind of an interesting trade in there for the bears trying to sell a micro channel. So usually when you're going to use a limit order to fade a breakout looking for a second leg down, you've got to assess your entry bar. So instead of taking the sell there because this was so strong, I watched them get 5 points and then it come back and close. And so I thought to myself, well, I don't think they're going to stay in that trade. They wanted a big tail sideways and then second leg down, didn't get it. So you basically fade their entry. And so it's another way to get long. So we didn't break the 6 high yet. That is 66.50. That is also 66.50. Didn't break the 6 high yet. That is 66.50. That is also 66.50. Is the swing point this inside bar, this lower high, this breakout? I'm using this breakout. You're a 15-minute bear, what do? Well, they sell there, maybe they sell more at the high, sell the close, and they need to get back to the midpoint of that micro gap. I'll just leave that there. But 4 strong bull bars closing near their highs, open gaps, full surprise. So I think both of these will get a second leg. So if you're short as a scale-in bear, you're in the region of getting stopped out. A lot of bears exit after a couple of strong opposite breakout, followed through gap. This is a good place to get out. But bulls need to break this high. Yeah, Paul, so bear micro channel, let's just ignore the market structure. This is basically a wedge on a lower time frame, right, with open gaps. So limit order traders will sell above the high of the first and second bars. But when you get a strong bar against you, let's say you see the gap, and you can sell on either point of that gap. Sometimes the entry's right in the middle of that gap, and you get a very strong entry bar against you. Now you've got an option where you're basically only 1 point underwater. You have a chance to get out of that entry and say, you know what, I was expecting a tail, I didn't get what I wanted. And a lot of that's kind of high frequency scalping. You know what you want to see and you don't get it, you're out. So the alternative is, as it's forming, it's kind of rocketing up. So you choose to do the opposite. Instead of taking that sell, you wait for the traders to sell, and then you basically buy from them at that point. So you know where the entry is, and then rather than taking it, now maybe it works, great. But if it doesn't, you can basically get in where they get out. So bulls getting some work done. They want to get a couple more closes above the moving average. Yeah, so Paul, I probably didn't explain that so well. Like, you know where the entry is, but you have a choice whether to take it or not. And if you see that it didn't work, then you know there are traders in there saying, you know what, I need to get out. The alternative is it works, and then you kind of get a second shot at it. We had a few of those yesterday. So like 13, you're selling at the low of, basically the low of the day. Instead of taking the sell under there, it works, and then you see if you can get a test back to the underside of that bar, which you got there, right? So under there, it works, and then you see if you can get a test back to the underside of that bar, which you got there, right? But if the market's super strong, it won't always let you in that way. So. See what happened to these 8 bears. That's their average price. There's some more there. Miles away. Very tight channel on the 15-minute chart. 1, pause. Maybe this is 2 and leg 3. A bit hard to break up the legs here. They're not really the same size. 1, 2, 3, so 1, pause. Not clear, but very tight. So I'd be pretty surprised if that just rocketed up without coming back and testing these prices. So, good question. When does the small pullback trend from yesterday end? Well, when it no longer has the shape of a small pullback trend. So the character in here changes when we close all the gaps and form a horizontal range, so we break out again, and now we're channeling. So we break a trend line, pull back, we go below, we pull back, and this line can stay in effect for quite a while. But that's what we said here. The way to break it is usually climactic one way or the other. Otherwise, it would just stay that kind of difficult to read, but always going down, never runs any stops kind of style. But this is not small pullback bear trend behavior on this time frame. But this is not small pullback bear trend behavior on this time frame. This is still a micro channel. This is still a small pullback bear trend on the 15-minute chart. So bulls seeing this as bull spike and pause, they're looking for basically a high one buy on 15. They're looking for a second leg up. But a lot of tails and a triangle to the left here. So I suspect we'll have a few more sideways bars. So I suspect we'll have a few more sideways bars. It's a day where the stop is far away and so the size is small. Do I think bears need a second entry? Well, this was surprisingly strong. So you've got a bear surprise expecting a second leg down, but then you get a bull surprise. So the market usually has to deal with the last thing first. I don't know if you call it, was that LIFO, FIFO? I think it's LIFO. So the market needs to deal with this and then complete this pattern. That's why I think we'll get both. Pattern. That's why I think we'll get both. The advantage for the bulls is anyone that's sold down here who's still holding short is going to switch to becoming a buyer. So they've got layers of support down here. But we know the most kind of likely scenario from a bear channel is some kind of trading range. We're just not really sure on the top and bottom of that range. Does the 1 minute chart show a small pullback trend? May I throw it up? You tell me. Can the bulls break the one high? Make a move up to that last bull spike. Weak sell 14, not really strong enough to expect to reverse this. So you're expecting them to at least get trapped up to the one high. Yeah, I think call it bull channel, testing the moving average. So good bar for the bulls. Running the bear stops. Bulls able to get strong bull bar and follow through on the 15-minute chart. Now we've got 5,500 as the big round number up there. That's on the chart. Okay, so we've got a new high today, 74.50, 74.25. Yeah, one tick. So all the bears are losing dough, which is a first because yesterday bears making money all the way through. And that was interesting because here the bulls ran that lower high by one tick and then set up what should have been buyers down here. Buyers failed. Bears made 20 points sideways. Reasonable signal bar, but also low probability. Takes off, great follow through. Bears exit and reverse, and now we're back up to the one high. Do you think the stop was above the bar one high? Well, here, at this point, you've got a new low. But if you're selling in here, then you need 75 or 77. I think 75, I said, because we broke above 77. So usually it's best to put the stop above a bear bar if you're going short. But then you get a new low on 6, so then the stop doesn't have to be so far away. Maybe use the one of these inside bars. Generally, I don't put my stop in the middle of a triangle because it's a magnet, so I usually keep it away. When I was scalping lower, I just used the 6 high. And then, so the bulls have now got a high low on 15. They just went to a new high today, but I don't think that's a great place for a stop because we've gone down, up, we're in a trading range, we're in the top third of that trading range. So if you bought 10, stop below 9, there's your 1-to-1. I think another way is to, if the bar belongs to the bears, then that's the high low. Sometimes that can work, but it's still going to put you, you still need your 1-to-1 up there. So it's kind of interesting when you look at the shape of the bars. This kind of price action just keeps going lower, just keeps working its way, 10, 20, 30 points down. And then this kind of price action plummets into a price and then rockets back out. So 16, bull bar closing on its high. So always in long, we've got a new high today and setting up measured moves to the upside. We've got Globex high and we've got 5,500. I think you've also got bears who sold so higher and then had to take a loss up here and then had to reverse, and then their measured move is back up there. It's about 5 points below 5,500. That's another possibility. Who asked that question before? Paul. So that was another. Wait, you see 15 outside bar. You can buy the close or wait to see if it closes the breakout gap to get in. So we had a gap there, wouldn't have worked, but here it is. So I think we're going to the Globex high. We don't have to go straight up. One leg. First leg very strong. So maybe 14, 15, is that all the second leg the bears get? Maybe. Certainly don't want to be short. So there's the 1-to-1 from that buy up at the Globex high. So we had that third leg on the weekly chart, bulls buying in there, bulls buying the low. And those bulls are trying to get back up to 55.0275. So we're getting back up to 81 yesterday. 4 bull bars, 80 reasonable bull bar. It's not a great buy in my opinion because it's sitting below the moving average in a bear channel. It's usually a good place to sell, but traders did buy above it, which is where we're sitting up to now. Aaron, that's okay. That is okay. Big bars today and climactic moves and not clear second legs. So that's fine too. You've got to be able to trade very small. You can see limit order traders couldn't sell above a bar on the way down, and it was very difficult to buy below a bar on the way up. And that's climactic behavior, which is what this kind of movement says versus this kind of movement. One drops down and goes horizontal, drops down horizontal. This one just works its way down. So this one's actually stronger. It looks like this should be, but everyone hits their proper targets and exit. Let's have a look at the ETH chart. So ETH could be some kind of a wedge. There's been a couple of reversals in there, but still a bear channel. It looks really good for the bulls here on the 5-minute chart, but on ETH here, we're basically outside, inside, outside, so breakout mode. So traders can also lose a lot of money because if they decide not to use the correct stop, market's moving quickly against them. That's it, Rip. Use the correct stop. That's why micros are great. Just have MES on another screen, and then you've got a way to get in. If you're hesitating on entry, a couple of reasons. One could be you're not clear on what the setup is, something you haven't practiced, you haven't researched, so you're basically just hitting the button blindly. So that's not a good idea. The other one is the size is too big, and you're not prepared to so it's a warning to say, oh no, the risk is too big. That's a good sign. The other is the market structure you're looking at is one you haven't practiced. Now, some traders love this kind of reversal. Other traders won't trade it. Limit order traders can't get in on the way down. Limit order traders can't get in on the way up. And they don't care because this happens less than 20% of the time. So the other 80% of the time, they're cruising. Nice, Tom. Well done. That's excellent. Not easy environment to trade, but if you trade small, use a wide stop, then you get a chance to do well. What I do here, I missed to sell the close of 6, so I had to sell the pullback and then took some off, and then on the way up here, I exited the second half and break even. Instead of taking the sell, I waited to see if they got trapped, which they did on 11. So I bought the pullback 12 and then got out the moving average and then bought above 14 on 16. So I've basically just been trading breakout pullbacks, 1, 2, 3. Every trade of mine was a breakout pullback. So that helps get rid of hesitation. Find something you really like and then you just becomes a motor skill. And if you didn't trade it well, no worries. And you wake up tomorrow, you print it out, you go and find a couple of days that look the same, you get market replay, and I would practice doing the right thing and the wrong thing. So you put it on, 3 or 4 times the speed to practice where the entry should be and pause it and think about what you're doing. but then also take the wrong entries. So you sell 14 and do this one on regular speed. So it triggers your entry and you feel good about yourself. You're like, yeah, I've sold at the high, we're going down. But then you get this feeling during 15 that something's wrong. And then when it closes on its high, then you know, oh, that's not the place to sell more. I really need to be looking to get out. Even though you could sell higher and get out, usually it's just easy to get out, get flat, so you can take the next buy signal, which is 16. Does that make sense? Yeah, but because if you always practice at fast speed, then you get this weird feeling that things aren't working. You're training impatience. So big 18 for the bulls, breaking above 81 yesterday and trying to break that 75 swing point as well with a Globex high. And that's the end of the ETH hour. Huge bull outside bar closing on its high. So this close forces anyone in here to rethink what's happening. But that's a huge risk on a 60-minute bar. We've had 1, 2, is 18, leg 3. Well, we're still in a micro channel, so nothing to short, still always in long. But I suspect we'll start going sideways around here, maybe a little bit higher to 55, back in this thin range here. Yeah, but that's, DLJ, it's interesting taking the wrong entries would be easy. Yeah, it was easy for me too, because I could just look at my own trade markup and be like, oh yeah. But if you use market replay and then practice the entry and, practice getting the order at exactly the right price, make sure the stop's at exactly the right price. Like just practice those motor skills, because when you add pressure and add money and emotion and tiredness and, euphoria and revenge and every other emotion that's going to be present, it'll be the motor skills you've practiced that will show up. And everything else that hasn't been practiced will be either hesitation or wrong. I think most people think they can just do all their practice live, but there's no other sport where that happens. Like basketballers aren't doing new stuff on game time. Like they're doing it alone in practice every other day of the week. Like the game time is when you practice, when you show the things you're good at. Well, NinjaTrade is free, and the market replay data is free. There are other programs. I'm just not sure what they're called. I mean, TradingView does it on a bar-by-bar basis, right? So, if you're selling the close there, then your stop's up here somewhere, right? Which is a lot on one contract. You know what I mean? And if you didn't sell here, then I'd be asking yourself, what did you see? Like when you're looking at your trades tomorrow, what did you see here that wasn't present on 6 and 7? So that would be the first thing I'd look at. And same here. If your first buy was 18, tomorrow look at what was not present all the way here to get long. And you might be finding, if you're taking those entries and getting stopped out, well, then the stop's probably in the wrong place. But you're probably waiting for probability, and that's okay. But the payoff is risk and size. So you can wait for that entry that's very small, so then you can take a small loss, I think. Yeah, so when you mark up your charts, right, you print out like a month worth of charts, say you're taking 5, 10 trades a day. Okay, so you've got 100 trades there at least. Print them out and look at them, and you'll find that most of the winners are a certain kind, and most of the losers are a certain kind. My most common one was fading the yesterday's magnets without waiting for a second entry. I just used to love doing that. I used to lose a lot of money doing that. It would undo all my breakout trades. And, you print them out, you have a look, and then you go away, do something else, you come back, and patterns will appear. right? There will, and you'll be like, oh, I always scale into leg 3. You'll be like, oh, I always scale into leg 3. But scaling into leg 1, well, we're in a breakout, so maybe leg 2, fine, but leg 3, you've got to be careful because it might be breakout mode and trying to do the opposite. So on the 60-minute chart, it's still a bear micro channel that we just went above the high of 5 bar, which is there. All right, so I think we're going below 18 at some point, but that's a 60-minute chart, so it doesn't have to be immediately. On the 15-minute chart, we broke out of the bottom of the bear channel, and now we're back up at the moving average, which itself is the top part of the channel. So bulls would like this to just pull back and then do another very strong leg up, and this is very strong, but we might have to go sideways to make it clear that we're not just going to fall back into this range. Oh, nice. You're welcome. And you don't have to practice too many entries. You know what I mean? Find one you like. You know, if you like swing trading, then you're looking for a breakout and then the next sell signal. The stop's where the stop is, and then you can measure your targets. You know, on trading range days, you know, fading back to the moving average, great strategy. Looks like a trading range day, has a spike, fails, then you basically just trade back to the moving average. You know, whatever your setup is. If you like high 2s and low 2s, then you can do that on a trading range day as well. You just do the exact opposite. Wait for 2 legs and then expect it to fail. In your pullback entries, how do you know what point to get in? Well, I mean, generally, it depends what you're pulling back from, but if you take the concept of breakout and follow through here, right? So this is a new low, so I don't count 9, right? Because 9's a new low, it's a bear breakout. But 10 and 11 are breakout and follow through closes. So if you take that second bar and you go and look at 100 of these, you're going to find certain patterns. The first is a test back to the high of the prior bar. Second is 50%. Third is 30%. When a bar doesn't pull back to 50%, everyone has to chase. So you start to feel where your orders should be, and obviously you can't place like 6 orders there. You know, you get filled with 6 contracts. It's going to be too much. But you miss because you were kind of too conservative. Like here, you tried to get 50%, you missed. Okay, so now when you try and do it on the next bar, you're not going to do 50% again, right? Because everyone missed doing that. So they're going to have to move it up. What they move it up to? They move it up to 1/3. There's a bear bar, traders will sell above it, be like, nah, I think you're going to fail. So you buy from them. So inside bar, so that's the end of another leg. We've had nearly an outside bar, starting to go sideways in a channel here, but I think these bears are going to get stuck and we're going to go up to that measured move target. I think you've got to practice opens. If you're going to trade the open. Here is a trading range. Here is a trading range. You get breakout and follow through, but it's not clean. So instead of expecting it to do this, you're expecting it to do something more like that, right? You go all the way back to the bottom of that trading range, but you're not expecting it to do that. You're waiting for it to succeed and sell or fail and buy and run their stops. So always easier in hindsight. So if you bought 16 with a stop below 15, your 1-to-1's up at the Globex high. basically breaking 75 from yesterday. You just went below 19, so you got a little range there. Should put us up into 93 and up to that measured move target up there. Still another high one in a bull spike, but we're starting to go sideways. So you can't buy here and put a stop below the bar. The stop's got to go where the stop goes. Sideways. So you can't buy here and put a stop below the bar. The stop's got to go where the stop goes. That concept, Paul, I was saying about the pullbacks, you can also use on a leg. So if you're looking at a leg and we're in the 30% of that range, the company decided not to do bonuses this year. Yeah, dive in, learn it, make sure you do the course, do the trading room. Just got to practice lots. Yeah, I just did way too much live trading. I just expected it all to click, and then I would just go from like losing thousands a week to somehow making thousands a day. And that was unrealistic. The first goal was actually to stop losing thousands of dollars. That makes life much more enjoyable when you're trading. Because then you trust yourself not to just absolutely turbo your account. Absolutely turbo your account. And that's what Al says, you know. Rule 1, stop losing money. Step 2, make a little bit. And then 3, make a lot. So another breakout for the bulls above the Globex high, working our way up to those 2 targets. So you can see if you're a bear, say you're a bear, you try to scale, and at some point you've got to give up on your selling and you reverse. How many bull bars closing on their high do you need to get out of your short position? Even if you waited 5 bull bars, you now just made back your loss. Does that make sense? So even if you sold here, stop at the top of that spike, and you're like, man, I'm so wrong, and I've really just got myself cooked here. You've got a buy signal on 15, and you're back. But that wasn't something I could do for a long time because I would get too upset. 1, pause 2, so probably leg 3, but just no bears here. So 21, big bar, probably have some profit taking up at some of these targets. We had 2 to 1 on 15. We had 1 to 1 on 16. Oh, that's not that. Nice. So if we scroll across, that was the bottom of the bull leg. The bulls are trying to scale back to. My target's just short of that. It's 55 flat. But I'll take some off on this bar just for fun. See how it closes. So big bar 21, closing on its high. So not an easy place to short. When I couldn't hold on to trades, I just assumed every time I sold this was going to happen. But this happens so infrequently that you need to know how to deal with it, but it's just not the common thing. You look at every bar you can sell here. How many bars are that? And out of those 90 bars, let's say 70 of them are bear bars, only 1 of them had that happen. So, g'day Jimmy. The bears need to give up on. You're saying the bears need to give up on selling. Yeah. So the concept of break-even trading is that about 80% of the time you can avoid losing money, right? So 80%, not 100% of the time. That's the first thing that people get wrong, is thinking that no matter where I enter, I can fix it. So I tell everyone to kind of remove that word, because you're talking about 80% of the time. And that's 80% of the time if your entry's in the right place. But you're also trying to look at the strength of a breakout. This is a breakout and follow through. But this is also a breakout and follow through. So at some point in this area, you've got to decide that your second leg down, sorry, you're using a 15-minute chart. Let me get the 15 minutes. Because it's a good question, right? If you're selling this bar, once you see this bar here, this is a buy signal for a swing, right? It's still a low probability setup, but it's a setup for a swing. So you've got to say to yourself, okay, well, I'm looking to scale in, but what is the case that's going to invalidate that? Well, what I was saying earlier is when you look at a micro channel, you look at bears selling above bars, if they can't make money, that's my sign to do the opposite, right? Yeah, so you're selling 50% of that bar, which is fine, but you're doing it as a breakout of a channel, and you're hoping for this to go breakout, pull back, and come back. But at some point, that pullback became a new breakout. So it became a new breakout here on the close, and then it became a new breakout and follow through here. So at some point, you say to yourself, you know what? The opposite is happening. I need to either get out or reverse. And that's one that takes a bit of practice, because you've got to be able to say, in here, selling 50% of a bar is okay. But tails, sideways, no breakout follow through closes. But that's a little bit different. Does that make sense? Because you can't just keep scaling in forever, right? At least the account will break first. Now, it might be that we come back to that price, but, can the account handle, 300 points higher? A good guide for that, I think, is the swing point, or where the bear stop is. So if you have a stop here and you sell the 50% of that bars there, right? So you sell, and then you have a bull close above your entry and a pullback to that price. So a lot of the bears that did exactly the same thing used that to get out. And then if you miss that, which happens, it doesn't always let you out then at some point, instead of you stop getting hit, you choose to reverse and do the opposite. I think I've gone way over time today. Actually, I'm meant to be on only till 11. Oh, well, bonus. Well, thanks, everyone. Appreciate being on the trade room. It's great chance to be in the room. Tough, tight trading range here with the double bottom. The double bottom failed, getting short, and then really strong reversal, broke a swing point, and then measure move up. So hope that was useful. If you've got any questions, feel free to DM me as well. That's why all the presenters, that's why we do what we do. Learn a lot from the trade room and from Al. Great to support the team and give back. So yeah, much appreciated. And it's like, man, don't feel bad about doing dumb things. Seriously, I've got slide decks plural, of like 300 slides of just horrendous trades. I even keep saying I'm going to get them out to show people, but I open it and I'm just like, I just get that feeling, oh man, like I'm just never going to get this. It's just the worst trades. Yeah. So just keep practicing. You'll get it. Thanks, everyone. All right, well, I'll close down the stream. Thanks very much. And tomorrow, I think we've got We've got lovely Rose back on. Let's have a look. Is it Rose or 25? Yes, it's Rose and Brad closing in the end of the week, and then we've got the end of the month next week. All right, thanks everyone. Catch you later. Good trades.